Good afternoon, everyone. Again, my name is Steve Rannekleiv. I am the Global Sector Strategist for Beverages at Rabobank. And Emily has asked me to talk a little bit today about kind of M&A trends in beverage alcohol. And if I had to kind of summarize beverage alcohol trends, some of what we're seeing in the market today, I would say there's a little bit of a rethinking of the long tail. And when I talk about the long tail, I don't want it to be confused with the tall tales that we sometimes hear about brand building, right? The brand that's built by little gnomes harvesting unicorn sweat and aging and distilling in a dragon's lair. That's what makes their product special. I'm not talking tall tales. I'm talking the long tail, and where the book that came out in 2004, The Long Tail, that really basically said, the future of selling is not about a small handful of brands that sell large volumes. We're really seeing a shift towards a longer tail of brands, smaller brands that resonate with consumers. And this really helped beverage companies understand what was happening in the market. It was influential. It was a message that they really needed to hear. And it still has a very strong influence in terms of how companies are thinking. But it seems like, from what I hear from a variety of companies, there's a bit of a rethink and a refining of how we think about the long tail. When I think about, where we see some of these changes, a great example is in the wine industry. And if I've been tracking the wine industry for about 16 years now, and for most of that time, we've seen most of the deals that were done were really small deals that, kind of large wineries buying small wineries. This year, 2021, has been the year of blockbuster deals where, like, I've never seen before, where you had Constellation closing the sale of 30 brands to Gallo. You had the sale of Chateau Ste. Michelle, the Vintage Wine Estate SPAC deal, and a number of these other deals that have been really blockbuster deals. But what's been really missing from the market this year, which was a bit strange given how challenging last year was, is the number of the small deals. And from talking with a lot of the larger wineries, they thought this was going to be a year for them to make some acquisitions. They were going to come out, and this was, they came out strong out of last year, and this is going to be a good year for them to make acquisitions. And it's not that there are no kind of wineries in the market. One of the biggest challenges that they've had is kind of this mismatch in expectation of valuations. A lot of this has been driven by some really exceptional valuations in some of the publicly traded deals that we saw. The Vintage Wine Estate SPAC deal, there was kind of publicly available information on that was done at about 25 times EBITDA. The Duckhorn IPO was done at about 20 times EBITDA. So there's this kind of massive shift in thinking, and sellers, a lot of the sellers in the market are saying, oh, wait a second, now the benchmark has moved. Kind of the going rate for wineries is now in that 20 to 25 times EBITDA. And the buyers are stepping back saying, hey, wait a second, those may be exceptional cases, but there's an awful lot of these big deals done, that aren't being publicized, the valuations aren't being publicized, that are getting done more in the 5-7 times EBITDA, and sometimes even lower. But those aren't being taken into account when some of the sellers are looking at this. So there is what we talk about sometimes as a gulf in valuation expectations, huge variations, and there's always a little bit of a mismatch, right? Sellers always think it's the best time, and buyers always think they're looking for everything on discount, But right now, it's extremely difficult. And one of the things that makes it difficult as well is to say, okay, if you're a seller, you're going into the market saying, I'm looking to sell. And the buyer says, okay, well, let's look at this as a multiple of 2020 sales. And they say, wait a second, that was an exceptional year with COVID. So it makes it very, very difficult. And that's been kind of one of the things that's holding deals up. But we're also seeing a little bit of, maybe in some ways, some long tail fatigue coming out in a number of different ways, at least among the large corporates that are saying, okay, there was lots of activity in buying craft brands, and they kind of in the craft beer space, they maybe peaked in 2015. In craft spirits, you could argue that maybe it might have peaked in 2019, and we still don't know because of COVID and some of that stuff. But we know that at some point, once a large kind of corporate has a couple of craft bourbon brands, how many more do they need, et cetera, et cetera. But there's also, I think there's a bit of a kind of thinking around how many do we need, and a bit of fatigue that we hear from some of our corporate clients saying, well, we've made some of these acquisitions, and even the ones that are doing really well, they're kind of too small to move the needle for us. We need to, we need kind of a long tail, but how long do we need it? And we need some critical mass in some of these brands. And I think there's also this idea that there is a cost to carrying an enormously long tail, and we've seen this kind of trend over. If you look at what's been coming out in the market, Coca-Cola saying it's going to reduce the number of brands from 400 to 200 in its portfolio, and those 200 brands, half their portfolio represents 1% of their profits, right? So there's, they're carrying this enormous number of brands that doesn't really move the needle for them. But the other thing too is, as companies are thinking about, the need to introduce kind of more niche brands and so forth, we're also seeing a bit more comfort from large companies to say, maybe we want to bring some of the innovation back in-house, where they had given up on innovation, say we're just going to outsource it. And now they're kind of saying, well, maybe we need to just learn to, fail fast, put stuff out there, get to market fast and fail fast and see how that goes. We've seen kind of Pepsi with launching bubbly and see some nice success there. We had some conversations with them, and their, how their thinking has evolved from like 2006, 2007, when they were buying like Izzy and Naked, and now bringing some more of the innovation in-house. Gallo has had exceptional success with High Noon. Heineken launching a wine in a can, and then kind of you look at what Brown-Forman has done with Old Forester, kind of starting back in 2015, taking a brand that was in their portfolio, repurposing it, bringing it up, kind of essentially doubling the price of the brand in the market, and relaunching it to so repurposing a brand, and in some way maybe bringing that in-house, taking brands that they already have in-house and using it to fill voids that they would have used for acquisitions in the past. That said, right, I mean, when we say that they're maybe rethinking the long tail and there's a little bit of long tail fatigue, there is certainly plenty of appetite out in the market for making acquisitions, but maybe raising the bar a little bit more and thinking a little bit more cautiously about the acquisitions that are being made. And some of the areas that we see lots of interest is in kind of emerging spaces where they have portfolio gaps, either because they never had them or because it's an emerging space, like the kind of rise of hard seltzer has created lots of interest in RTDs. The kind of tequila mezcal phenomenon has created a lot of interest in that space as well. And then the non-alcoholic space, the investments in brands like Seedlip and Cedars and a number of others that really kind of move the needle. So there is plenty of interest if you've got something that's truly differentiated in the market. And then maybe beyond just brands, there's a lot of thinking, in terms of how companies can build route to market and routes to the consumer. We know that these are evolving very quickly, especially in today's market. If you look at the interesting thing to me was some of the spirits companies like Pernod Ricard and Campari that have kind of gotten away, de-emphasized maybe their wine portfolio, making investments in wine e-commerce platforms like Bodeboca or Tannico. Even though they're not really involved in that space, it's a great way for them to get to know e-commerce and playing in that field and learn how to build that route to market. Empathy Wines, the investment that Constellation Brands made in a direct-to-consumer, and learning how to build those direct connections to the consumer and leverage those. Those are interesting opportunities for brands that are really specialized, and oftentimes it may be about building the route to market, but also it can be for a company bringing in-house some of those the specializations, the know-how, and so forth. And then one of the other things that's been really interesting has been brands that can target new demographics, enter new markets. Constellation Brands, I think, has been really active in this space lately with investments in things like Kerr Vineyards and Fête du Rosé, and investing heavily behind female-led and women of color or people of color brands. And it sounds great, but it's not just a story. It's a really savvy investment to make right now. We've done some research and looking at the changing alcohol consumption habits, and really most of the growth. If you look at particularly white men, the consumption habits are kind of stagnating or declining. Most of the growth is coming from women, and particularly women of color. We don't necessarily. A lot of the guys that are building brands kind of look like me, right? We always joke on our team that we've got a bunch of Mitch McConnells trying to build brands for AOC, and it doesn't really work very well. We need to be investing in brands and bringing in people that can build brands for a new demographic. And then, of course, there's also just kind of scalable premium. And this is, we've been having a number of conversations. I was talking with somebody on Friday. As they're thinking about how do they kind of build their capacity in the premium space and kind of learn how to build brands. For some companies, it's not just about having the brands. It's about learning how to build these premium brands. And there has been for a number of years interest in acquiring these premium brands, but we also, I think, where I see a little bit of change in some of the conversations I've had is being a little bit more, or I would say maybe raising the bar on conviction about the ability to scale some of these brands, and what scaling looks like may vary a little bit depending on the price tag. And that's pretty much mostly what I had prepared for this afternoon. Just maybe add one last thing. We do produce a podcast. We bring on a lot of interesting guests. We were lucky enough to have Emily join us early on, and she was a fantastic guest. We've had some, discussions with folks like Tom Cole from RNDC, the folks from Kerry Flavor House, people from the wonderful ZX Ventures on, just to talk about what's happening in the market. You may find some useful insights there.